All right, we got another episode of Grow Your Money DIY, where we're going to go over three things. First, two crucial things anyone trading Opendoor right now should know. Then we're going to go over where I plan on buying more if the opportunity presents itself, and where I would sell to lock in profits, or hopefully get the full payout if this runs as far as I think it's going to go. So let's start with, before we go to the chart, let me show you a very interesting tweet from today. This is Christian Kulumagi, very big trader, what they call a whale, since he's made, I think, over $100 million from trading at this point. That's why what he says is pretty important, especially since last time he caught the run-up of AMC, GME. He's great at spotting good opportunities. He's gone back since I think the beginning of trading to study all the charts and just study the patterns and trade the patterns that work. And he's one of the most efficient traders out there. So I take notice when he tweets stuff like this. Every extended bull run, this is him, every extended bull run ends with a stock or a group of stocks going batshit crazy. Feels like Open may be the one this cycle. So, like I said, he's very good at spotting opportunities. The fact that he's watching it, possibly trading it, is pretty important. Because he actually used to trade live during the pandemic or the end of the pandemic. And just his insights are definitely, out of all the tweets out there, it's hard to tell which ones to pay attention to and which ones to ignore. His are good to pay attention to. I mean, no trader is 100%, but, like I said, after spotting the big opportunities last time, I say he's got a pretty good eye for it. I mean, much less it's definitely probably the most popular stock being traded recently. I mean, today we have a sell-off day on the market. I think the S&P is down 0.5% right now, and Opendoor is up 14% right now. So that is, let me show you actually the kind of pattern he looks for. And Opendoor fits that pattern. Let me show you. Let's back up here. So the stock had a big move, and then it pulls back. And that is where you watch it. That's probably when Kulumagi started watching it. Hopefully I'm pronouncing his name right. And then it builds. And he watches for it to surf. See this green line is the 10-day moving average, and the red one is the 20-day moving average. He watches for stocks that surf those lines and respect them. And going back all the way to August 14th, when I first started covering the stock, that is when Opendoor started respecting 10 and 20-day and surfing it ever since. And that is when stocks, it doesn't happen very often at all, but that's when they can have explosive moves like this one's been doing. But back then, we went from 2 to 6. Looks like we might close out Friday, breaking 7. See what happens into the close. So that's why I took a note of his tweet and a note of the overall pattern, which I hadn't even checked recently. I mean, I've been looking at so many different time frames of this. But you look on the daily chart, and it's most bullish when it's respecting the 10-day. And it's definitely been surfing it for 3 weeks now. So that's number one. Number two, set up on the video, I'll actually put a link to the tweet I just showed and a link to another video also that Eric Jackson posted on Twitter that is it's at the 1 minute 30 second mark. I'll share the link. You can click on it, watch it yourself. Somebody said it's very crucial, and what a lot of experienced traders, investors are definitely paying attention to. And that's when he says the thing that's really going to decide this stock, once all the momentum's gone from just it being, it is a meme stock at this point until they have actual fundamentals going on. So, it seems like they're trying to get the board on board to actually make moves to make this a more profitable company. But what Eric Jackson said that was crucial is who they hire for the CEO is going to decide whether this is a 50-cent stock or a $50 stock. And that is very true. The main reason this is moving right now, in my opinion, is just all the speculation on who they might hire for CEO. There's multiple reasons, but that's one of the key reasons. So something very important to pay attention to is how the market reacts, how investors react, since it's mostly running up on retail buyers right now, to if they like the CEO hire or not. That's the two crucial things. What Call Maggie sees and the way the chart is moving, and what Eric, because Eric Jackson posts so much stuff, it's hard to keep track of all the stuff he says. But that was one of the key things he said in the last couple of weeks that you definitely want to take notice of. So that being said, went over the key points. Now let's go over an important point on the chart. So like I said, it's been surfing this 10-day. And I know a lot of people have been trying to, when it runs up, sell, and then when it pulls back, rebuy. And it's getting more confusing now. Like, is the next run going to be the big run? Should I sell then and lock it back in? Right now it's got plenty of space between $6.80 where it's at right now and $10. The only thing that could stop it is just fear of no one wanting to be the last one on top before it has another pullback. But the good news is the pullbacks are getting smaller and smaller. And that is really exciting because it's creating a tighter range, which is when you could really feel confident about sizing up. But at the same time, if it pulls back to right here, where the 10-day is, this is the daily chart, to the $5 mark, that's basically where it has to respect right now. If it pulls back to the $5 mark and consolidates, that's where I would definitely consider buying more. Last time I doubled up at when it was $3.60 with an average around $3. So I'm over 100% right now. So anything I get would just be extra. So I'd feel pretty good if it pulled back to $5, adding even more shares, especially with the room to run and the momentum this still has going on. At the same time, if it breaks the 10-day and starts heading down to the 20-day, which is at the $4 mark, that's where I would definitely consider. If it breaks this, I would probably lock in half my profits right there. And I'd still have half if it broke the $4. Risk management, that's most likely where I'd have to lock in the rest instead of just giving up the profit I have left. So that's two crucial levels, the $5 mark and the $4 mark. So I just want to share this. I know it gets confusing, especially if you're a newer trader. You didn't trade during the last GME craze and all that, to know, because some people are buying so many shares, and the more shares you have, the tougher it is to make decisions on when to buy and sell and all that. Because we obviously all want to make the most we possibly can off of this. So that's what I'm trying to help you do as I join in the fun. But at the same time, it'll definitely be fun if this thing runs up to $10 or $13 and hopefully even 24. But for now, it's strong. That could always change. But for now, everything's looking good. And I'll probably keep updating with more videos because, it's pretty fun for me too right now. But just remember where the risk is, the $5 and the $4 mark. So don't be surprised, even though we're having a good run right now, if it does pull back to $5, which, like I said, to me is an opportunity. But we all have different entry points, so you have to decide where your risk is. I just want to give you an overall picture of how it's looking right now, closing out Friday. And yeah, go Opendoor Army. Good luck, everybody. And let me know in the comments if you're still holding, if you're trying to get back in. Any questions you might have, I'll probably be checking over the weekend if you want to ask anything. All right. Have a good weekend.